The year was 1891, and the bucket shops of Boston smelled of stale cigar smoke, cheap coffee, and desperation. 14-year-old Jesse Livermore stood in front of a chalkboard where numbers danced like fireflies. He had no money in his pocket, only a borrowed $5 from a cousin, but his eyes were sharp and his mind sharper. The board quoted prices from the New York Stock Exchange, delayed by minutes, yet to Jesse it was alive. He watched the fluctuations the way a hawk watches a field mouse. Patiently, hungrily, waiting for the twitch that betrayed direction. He placed his first trade on a hunch. Burlington was going up. It did. $5 became $7, then $10, then $20. By the end of the week, he had turned the borrowed stake into nearly $100. The men in the shop, grown men with mustaches and mortgages, called him the boy plunger, half in mockery, half in awe. Jesse didn't care about the nickname. He cared about the feeling. The electric certainty when the tape confirmed his read, the rush of being right when everyone else was wrong. Word spread quickly. Bucket shops were illegal gambling dens masquerading as brokerage offices, places where you bet on stock movements without ever owning shares. They thrived on action, and Jesse provided it. He moved from shop to shop as owners banned him for winning too consistently. By 17, he was making more in a week than most men earned in a year. He bought tailored suits, ate in restaurants with white tablecloths, and sent money home to his mother in South Acton, Massachusetts, who still thought her son worked as a quotation board boy in a legitimate brokerage. In 1897, at 20, he arrived in New York City with $10,000 sewn into the lining of his coat. Wall Street was a canyon of stone and ambition. Ticker machines clattered like machine guns. Messengers in knickers sprinted between offices shouting prices. Jesse walked into the brokerage house of A. Houseman and Company and opened an account. This was a real exchange now. No more bucket shop games with delayed quotes. Here, orders went straight to the floor of the NYSE. His first big trade came in 1901 during the Northern Pacific Corner, engineered by J.P. Morgan and James J. Hill. While most speculators panicked as the stock rocketed from $150 to $1,000 in a single day, Jesse watched calmly. He had studied the pattern. When a stock is cornered, shorts must cover at any price. He bought heavily on the way up and sold into the climax, pocketing $500,000 in days. Newspapers called it the richest panic in history. Jesse called it Tuesday. Money poured in. He bought a yacht he named Anita Venetian after his new wife, a beautiful Brooklyn girl named Nettie Jordan. He purchased a mansion on the Upper West Side, filled it with antiques and servants, and joined the most exclusive clubs. Photographers followed him. Reporters begged for interviews. He gave few. "I trade on what I see on the tape," he would say, "not on hope or tips." But privately, he was restless. The quiet periods between big moves gnawed at him. When the market drifted sideways, he felt compelled to act. A small fluctuation looked like opportunity. He would buy or sell just to be in the game, telling himself a trader must trade. That compulsion cost him dearly in 1906. Convinced the top was forming after a long bull run, he shorted heavily. The market dipped briefly, then roared higher on a wave of easy money and corporate mergers. Jesse covered at a loss of nearly $250,000. For the first time, he tasted real fear. Not the fear of being wrong on one trade, but the fear that his edge might be slipping. Then came April 18, 1906, the San Francisco earthquake. Markets plunged worldwide. Jesse, studying the panic from his office overlooking Broad Street, saw the tape behaving exactly as it had in past disasters. Violent selling followed by short covering and a rebound. He bought aggressively as others fled. When calm returned, he was up over $1 million. The newspapers hailed him as a genius who had read the public's mind. He smiled for the cameras, but felt hollow. The win had been easy, too easy. The real test, he sensed, was yet to come. In 1907, the bankers' panic struck. Runs on trusts, collapsing stocks, crowds outside banks screaming for their savings. Jesse watched Union Pacific drop from 187 to 150 in days. He shorted with everything he had, margin to the hilt. The market kept falling. His profit soared past $3 million. He became the most famous bear on Wall Street. J.P. Morgan himself reportedly sent word asking Jesse to stop selling, fearing a total collapse. Jesse refused until the bottom was in sight, then covered and went long. When the recovery came, his fortune topped $5 million, over $100 million in today's dollars. He was 30 years old, richer than most lifelong tycoons, and utterly convinced that constant action was the key. The market is never wrong, he liked to say. Opinions are. But another saying began to circulate among older traders who watched him. There's a time to go long, a time to go short, and a time to go fishing. Jesse laughed at that. Fishing? When money was there to be made. He plunged again and again, refusing to sit idle. His marriage began to fray. Nettie wanted stability, children, a life beyond the ticker tape. Jesse wanted the next trade. They argued in their Riverside Drive mansion, while servants pretended not to hear. In quiet moments, he felt the strain of perpetual vigilance. Sleep came fitfully, interrupted by dreams of numbers scrolling endlessly. He drank more, smoked more, told himself it was the price of greatness. By 1908, the cracks were undeniable. He overtraded in a choppy market, taking small losses that added up. Commissions ate profits. Forced positions turned against him. One afternoon, he stared at a statement showing a six-figure loss on a single dull day and felt something new. Shame. Not for losing money. He had lost before, but for losing it stupidly, needlessly, out of restlessness. That night, he walked the deserted floor of the stock exchange after hours, courtesy of a friendly governor. The vast room echoed with his footsteps. Chairs were upturned on the trading posts like skeletons. In the silence, he heard the ghosts of every frantic order ever shouted there. For the first time, he wondered if the market's greatest enemy wasn't bear raids or bull pools, but the human need to act when action was the worst possible choice. He pushed the thought away. He was Jesse Livermore, the boy plunger grown into the great bear. He would not sit on the sidelines like timid old men waiting for perfect certainty. Certainty didn't exist. You made your bet and you managed the risk. Action was life. But deep in as good a seed of doubt had been planted. The market, he began to sense, rewarded not the busiest trader, but the one who could wait longest for the fat pitch. He wasn't ready to admit it yet. The lesson would require far greater pain before it sank in. The decade that followed was a blur of triumphs and disasters, each teaching the same lesson Jesse refused to learn. In 1915, he went bankrupt for the first time. Overconfidence after a string of wins led him to pyramid aggressively in a rising wheat market. A sudden government price-fixing order crushed speculators. Creditors seized everything, the yacht, the mansion, even his wife's jewelry. Nettie left him. At 38, Jesse Livermore stood on a Manhattan sidewalk with nothing but the suit on his back and a few dollars in his pocket. He did not stay down long. Old friends advanced credit. He rebuilt slowly, cautiously. No, that wasn't true. He rebuilt the only way he knew, aggressively. By 1917, he was worth millions again, largely from correctly reading the war boom. But the pattern repeated. In quiet periods, he traded too much, forcing positions that went nowhere or reversed. Commissions and small losses bled him steadily. His second marriage, to Dorothy, went. A stunning Ziegfeld Follies girl 20 years younger, brought glamour but not peace. They lived lavishly. Private rail cars, European villas, parties with film stars. But Dorothy spent faster than even Jesse could earn. Arguments over money echoed through marble halls. Through the roaring 20s, he remained a force. He spotted the Florida land bubble early and shorted real estate stocks. Profits rolled in. Yet again, in sideways markets, he grew restless. Inaction is unbearable, he confessed to a friend over drinks at the Ritz. When nothing is happening, I feel like I'm missing something. The friend, an older floor trader, replied quietly, "The big money is made in the sitting, Jesse, not the trading." Jesse laughed it off. Then came 1929. He had watched the mania build for years. Margin debt at record levels, shoeshine boys giving stock tips, radio commercials promising riches. By early 1929, he was massively short, convinced the top was near. The market climbed anyway, mocking him. Paper losses mounted into millions. Friends urged him to cover. His wife begged. Jesse held firm, studying the tape hour after hour. In September, the first cracks appeared. In October came the deluge. On Black Thursday, October 24th, panic selling overwhelmed the floor. Jesse's brokers called constantly, "Cover now or we'll be wiped out." He refused. On Black Tuesday, October 29th, the averages collapsed 12% in a single session. Jesse's profits soared past $100 million, perhaps the greatest single trade in history. Newspapers proclaimed him the man who broke the market. Hate mail arrived by the sack. Suicides were blamed on his bear raid. He hired bodyguards. At night, he sat alone in his new Fifth Avenue mansion, staring at ticker tapes spilling across the floor like white serpents. Victory felt like ash, because even in that historic win, he recognized the old flaw. He had entered some shorts too early, suffering months of drawdown before vindication. He had added positions on minor dips that later proved premature. Impatience had cost him tens of millions in potential profit and endless emotional torment. In the depressed years that followed, with the nation broken and the exchange half empty, Jesse finally began to change. He traded infrequently now, watching from the sidelines as former millionaires sold apples on street corners. He reviewed thousands of old tapes, charting every major move of the past 30 years. Patterns emerged with clarity he had never allowed himself to see before. Big trends took time to develop. The most profitable trades came not from predicting direction, but from waiting for confirmation. Volume surges, price breaking key levels, the market proving itself. Never buy on hope, never sell on fear, he wrote in private notes. Wait for the pivotal point. He tested the new discipline in small positions first. A stock would approach a resistance level. Old Jesse would plunge in, anticipating breakout. New Jesse waited. Sometimes the breakout never came. The stock reversed, and he saved capital. When it did come, clear, decisive on heavy volume, he entered with size and held. The difference in results was staggering.